There is probably a little bit more blood to come. I think that we will probably see Tesla pull back to 200, worst case 190. I do think that we will bounce from there. And I'm going to go over my entire thesis for Tesla and why exactly I think that this is going to happen. The first thing I want you to understand is that the market is always going to trade in a very consistent pattern, whether it's to the upside or to the downside. In most cases, what will happen is price will sell off, end up having a bit of a bounce, sell off, have a bit of a bounce, sell off, and we will continue this. This is called market structure. Now, the way that you can usually tell that we're going to bounce back up into that level is we will take a Fibonacci retracement from swing high down to swing low. And you're going to notice that the area we usually always bounce in is going to be this 0.826 and 0.786 level. You can notice that if we actually take another Fibonacci retracement from swing high down into swing low, that this would have shown you we would have rejected again at this same exact level. So that would have been two perfect short positions. Now, something to notice is that after Tesla hit that low of $140 back in April, we took a big rally back up to $200. If we were to do the same thing we've been doing before, we would take our Fibonacci retracement from swing high down to swing low. You'll notice this time price did reject in that area again, but instead of coming back down to test a low, it rejected a bit, found a bottom, and then broke through this old high. And breaking through this prior high is the most important thing here because this breaks structure. And so, if up until this point we have had perfect bearish structure and now that is broken, that means that we should see perfect bullish structure. Now, the way to find this is the same exact way that we were doing this to the downside. We're going to take our Fibonacci retracement from our most recent swing low, which is $170. And we're going to pull it all the way up to our most recent swing high. Pulling this out, you're going to see that the area that at worst case we're going to pull back to is between 200, 190, and $180. It's said in the industry that it's at these levels that Wall Street will turn on their algorithms or basically get the okay to start buying up that market cycle, whatever the ticker or asset is. Now, with this in mind, I have been playing calls ever since we broke above that $200 level and I knew that structure was reversing. We played this massive run up, like most retail investors did, over the past couple of weeks. I have continued to hold bullish positions on Tesla, even though I did take a lot of my profits on short term call options. The shortest term call options I have right now are December $260 calls. The reason that I was still bullish heading into earnings was that the BX trender on the weekly chart was still showing week after week higher highs, which meant that there's still bullish accumulation coming into the stock, which will most likely propel us higher and higher. The week is not closed yet. We still have Friday, we still have core PCE numbers. But as of now, even if Tesla bounces back to 230 or 240, it looks like the BX trender is going to close with a lower high. This will signal that in most cases, we'll probably pull our way back down to $200. Now, at $200, this is like a key institutional level, but it's more so a retail level. Most investors will notice that, oh, Tesla's at $200. This is my buy price. I will push the stock down here on purpose. They know that if everyone is looking to buy in there, that there's going to be people set with stop losses under 200, maybe wider at 190, maybe even down at about $183. And so they'll do what's called a stop hunt or a run of liquidity, and they will drive the stock through that level, tagging everyone out. And while they're tagging everyone out, they will be buying up shares within this level, buying up longer dated call options for pennies on the dollar, and then we'll most likely see price move up to $260. And what this does is it really manipulates and messes with retail investors and retail traders because they usually get hit at what's called max pain. So it's usually this occurs when you cannot lose another penny. If you've ever felt to yourself that you just sell and then as soon as you sell a loser, it completely recovers, it's usually because market makers are driving price through the stop loss or through the liquidity level, and all of your stop losses are tagging out while they're in fact actually buying into the opposite side of the position. With all that being said, I'm still holding on to December $260 calls, and I want to talk about why. In order to do that, we're going to have to zoom in now on a smaller time frame, still a very big time frame, but to look at the daily chart. We have what's called a bull flag pattern or a channel. So this occurs when price is making lower lows but in an uptrend and also making lower highs in an uptrend. In most cases, it will look something like this: breakout, pullback into lower high, into lower low, into lower high, into lower low, into lower high, into lower low, boom, breakout. And as we've shown you before, that pullback usually is within this range. And I think that the bounce that we're probably going to see on the shorter term is going to trap retail even more. I'm expecting a bounce, most likely back up to about 240, thinking that this is going to be our breakout before the stock gets slapped down maybe one more time. We've also been talking for the past week or so that on the daily chart, we've been seeing lower highs and turning into lower lows on the BX trender, which is also showing that on the bigger time frame, money is coming out of this. And you're going to see that just looking on a 15-minute time frame, if we take a horizontal tool and we mark off each and every single high, these most recent highs, you're going to notice that each and every single one of these have been lower or equal highs. Not once has price taken out a high. Once price starts to take out those highs, like we said on the bigger time frame earlier, that's where structure starts to shift. But in this case, we have yet to do that. Short term, going into the next week or so, I'm expecting you probably see a big bounce. We have PCE tomorrow. I think that maybe we'll see a push back up to 230, 235, maybe 240. But I do ultimately think from that part, but I do ultimately think from that level that we will probably reject. I'm going to continue to hold onto my December calls for now. I'm not going to lie that if price does push back up to $240, I might close them out and wait for confirmation on the BX trender to make sure that other buyers are sipping in. But no matter what happens, I'm saving, and I have been from the very beginning, a ton of capital to average down at $200 and $190, and I will be setting a stop loss at $170 to $175. If you want, we can draw this out very quickly. If we go into my templates, you're going to see that our equilibrium is right at 205. So the area to start buying for me or really starting to average down heavily is $200. From there, we have what's called the golden zone, which is where we normally bounce, and then our optimal trade entry, which is $185. So if we get this bounce up to 240, honestly, I might just start selling cash secured puts and just riding this all the way down, looking to acquire a ton of shares down around 180, 190, and $200. I hope this video helps. If you guys want to get access to all of my courses learning how to trade with the exact indicators and system that you see here, the links to all of our videos and resources will be completely free down in the description. Thank you guys for all the support, and I'll see you next time.